Today's number is 18.7%. That's how much inventory increase Calgary saw year over year for May, and compounding that with just a month's worth of inventory, the Calgary real estate market is still red hot. We currently have hundreds of buyers all across Canada on the sidelines waiting for rates to come down so they can buy a home here in Calgary. We also have countless sellers waiting for rates to come down and inventory to come up so they can sell and buy something that they like. And this is where things get tricky. No one can predict the future. And at some point, prices will come down and then they're going to go up again. So timing the market is next to impossible. Today, I'm going to go over what the landscape of Calgary real estate is looking like and what we could expect to see in the coming months. We're almost halfway through the year and Calgary real estate is only doing one thing, and that's going up. When you see that new listings are up almost 19% and inventory 6%, you'd think that we'd see some price drops, but we're seeing the opposite. Prices are up almost 10% year over year, and I've covered this in previous videos, but there are two major reasons for this. Number one, migration. Calgary's metro grew by 263 people daily, or 96,000 people last year. That's a 6% growth in just a year. We're seeing more people move to Calgary now than we did in our oil boom back in 2006, but why are people moving here? And that's where number two comes along, which is affordability. Before buying groceries, paying for your car, gas, your gym membership, you'd be spending 102% of your income on your mortgage in Vancouver or 85% in Toronto. Living in a lot of large Canadian metros just isn't financially feasible for most Canadians, especially with these high interest rates. This is what we're seeing in our 4 different market segments in Calgary. The detached home benchmark price just crossed $761,000. That's up 13% from last year and 1% in 1 month. If you're looking for a starter home with a garage, 3 bedrooms up, and maybe a developed basement, you're typically going to be between $640,000 and $700,000. When we go above $700,000, you're typically looking at a front attached garage, larger footprints, and something newer in the suburbs. Things are still selling in multiple offers, but only when it's priced well. We're averaging 100% of asking price currently, but I'm starting to see more and more homes sit on the market. This kind of market pushes a lot of sellers to test the price, and my rule of thumb is if the home is listed for under $900,000 and it hasn't sold in the first 2 weeks, the price is usually the reason. A lot of buyers say, I don't want to go into multiple offers, I don't want to overpay for a home, but just because there are multiple offers and you're paying over asking price doesn't mean that you're overpaying for the home. I have a lot of sellers who ask to list $25,000 to $50,000 under the price that I'm suggesting because they want to go into a bidding war because they think they're going to get over market value, which a lot of times just isn't the case. The market's feeling a lot more balanced than it was even just 3 to 4 months ago. Prices have come up a few percent, but we're also seeing a lot more inventory and opportunities for buyers, so they aren't rushing as much, which is good. All right, quick pause on this video. Listen, before I say anything, this isn't coming from me, this is coming from the entire team. We need more subs. A lot of our viewers are still not subscribed, so please like, share, and comment below on the type of content that you'd like to see next. One warning that I want to give is there are leading and lagging factors when it comes to future real estate prices. If we see less migration or even negative migration numbers in Calgary, or inventory gets into that 4 to 6 month range for detached homes, the homes under construction could pose a big impact on prices. When we're seeing home starts accelerating, this inventory won't hit the market for another 12 to 24 months and won't impact current prices. But if we start to see a slowdown in a year or so, and we're anticipating a large chunk of this inventory to come to the market, we could see a pullback in prices. This is exactly what we saw with condos in Calgary and why we struggled with way too much inventory for years. Semi-detached homes year-to-date sales are up 11%. We only have about 1 month of supply, and prices are up 13% from last year, and the benchmark price is almost $680,000. That's almost as much as our detached segment. A few years ago, there was a much larger gap between the detached and semi-detached segment, but with inventory constraints, a lot of buyers don't mind purchasing a semi-detached home. One thing to keep in mind is that a lot of these semi-detached properties are inner city infills, so we see average sale prices in some of the communities $850,000 to $1 million plus, which does push the benchmark prices up. If you're looking in the suburbs, you can still find duplexes in the 400s and 500s. And if you're looking between a townhome and a duplex in the same price point, always go duplex. way better for resale, and you own the land, and it's a lot easier to rent out should you choose to keep it for a long-term investment. The last two and most affordable are row homes or townhomes and apartments. We saw a 16% rise in sales for row homes and 19% with apartments. This really shouldn't be a surprise. These are still affordable for most buyers. Townhomes reached a benchmark price of $460,000 while apartments are at $340,000. Inventory for both is about a month, and going back to what I mentioned earlier, we need to watch new build inventory with multifamily. When the market shifted during the oil slump in 2015, new build inventory compounded with used inventory flooded the market, and we saw some condos drop 20 to 30% in a year. We expect to see continued price growth with these two. Our apartments and townhomes are still about 50% less than the average one in Vancouver, Toronto, or Ottawa. Calgary real estate is still positioned to be one of the fastest growing markets in Canada, but just like real estate markets all over the world, we're going to see ebbs and flow, but in the short term, we're positioned for some steady growth.